In December 2019, this company launched the IPO at a price band of Rs 178. However, the share did not receive a great response and opened at Rs 160. But since then, within 1.5 years, this share has zoomed to the current level of Rs 625, generating 4 times return. I am talking about Prince Pipe. But what is so special about this company? Can it continue to generate high returns for investors? What are the key strengths and future prospects of Prince Pipe? Hello friends, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. We will first start with understanding more about the company and its product offering, its management, competitive strength, then competitors, then key risk and future growth prospect. And then we will analyze the financials to understand if Prince Pipe is fundamentally strong company or not. Finally, we will do the valuation analysis of Prince Pipe and conclude if it is worth investing in Prince Pipe at current levels or not. But before we proceed, if you are someone who has recently joined the channel, then it is the 27th episode on stock fundamental analysis. So far we have covered a lot of great companies and some of them have really outperformed in the short span of time. For example, I created a video on Polycab on 13 December 2020 and I was highly convinced with the growth story of Polycab. At that time, it was trading at Rs 1040 and within 5 months, it is now trading at Rs 1650. That's more than 55% return. Motherson Sumi was trading at Rs 160 and now it is currently trading at Rs 237, giving 45% return within 5 months. Deepak Nitrite is up by 36% within 3 months since I published the video. Laurus Lab is up 34% within less than 3 months. Likewise, there are many stocks giving good returns. In addition to this, I have also created a series on top stocks based on market cap or theme like top 15 monopoly stock, top 10 mid cap, top 10 small cap, etc. Here I am not saying that you should blindly buy stocks based on my suggestion. The idea is to help you understand the business of various companies so that as an investor you can take an informed decision. Please note that my analysis is only for education purpose and not to provide stock tips. It is useful for long-term investor and not for short-term traders. And if you want to learn how to pick quality stock yourself, then I have a complete course for you. Details are in the description box. I also post a daily update on Instagram regarding top performing stocks in each sector, daily news and stock suggestion from top brokerage houses of India. You can also explore my Instagram page. Alright, let's start with the analysis of Prince Pipe. Established in 1987, Prince Pipe and Fitting Limited is an Indian manufacturer of polymer pipes and fitting for plumbing, irrigation and sewage disposal. As of today, Prince Pipe has 7 manufacturing plants all over the country with 11 warehouses to manage its 7,200 plus SKUs, that is stock keeping units. Company has a very strong distribution network with 1500 plus channel partners. If you look at the product segment of Prince Pipe, it is mainly divided into 3 categories. First segment is plumbing solution that include FlowGuard Plus, which is a CPVC plumbing solution. Then Easy Fit, which is a UPVC plumbing. Then Green Fit, which is PPR plumbing and industrial solution. And Rain Fit, which is roof water plumbing solution. Basically, the difference between PVC, UPVC and CPVC is that UPVC is better than PVC in terms of resistance from chemical erosion. Also, UPVC is more resistant to wider range of temperature as compared to PVC. However, both PVC and UPVC are not suitable to carry hot water. That's where CPVC comes into picture, which is the topmost quality product that can carry both hot and cold water and has better resistance to heat. So UPVC and PVC are useful for irrigation and cold water plumbing, and CPVC is the best choice for hot and cold water applications. Second segment is sewage and underground drainage portfolio that include products like Ultra Fit, Silent Fit, Form Fit, etc. And third segment is irrigation solution that include brands like AquaFit for agriculture piping, SafeFit for borewell and StoreFit for water storage. Mr. Jayant Chadha is the founder, chairman and MD of Prince Pipe. He's 74-year-old and has got 3 decades of experience in the piping industry. Now you might think that Prince Pipe existed since 1987. So it has been 34 years since the company existed. Now suddenly what is so special about it? Well, the answer lies in the vision of second generation leader of Chedda family. Mr. Jain Chedda has 2 sons, Mr. Parag Chedda and Mr. Vipul Chedda. Both are the executive director of Prince Pipe and have 20 plus years of experience in the piping industry. Both of them have the vision to lead the company towards its next phase of growth, and that's where I think there is immense growth potential for Prince Pipe. We will discuss the future growth plans of the company in the later part of the video. Overall, on the company, its product portfolio and leadership, I would rate it 10 on 10. Now let's discuss the competitive strength of the company. Its first strength is strong brand recognition. With more than 3 decades of experience in piping sector, Prince Pipe is a well-known brand and among the top 5 piping companies in India with a market share of around 5.5% in the Indian piping sector. Second strength is extensive distribution network. Prince Pipe has an extensive distribution network of 1500 plus channel partners and distributors across Tier 1, Tier 2 and Tier 3 and rural market. Third strength is comprehensive and innovative product portfolio. Company has a very comprehensive product portfolio with 7,200 plus SKUs finding application across plumbing, sewage, irrigation, industrial and underground drainage. Company has been creating innovative products and has been granted various patents for its innovative products. If you look at the competitors of Prince Pipe, Supreme Industry and Astral Polytechnic are among the leaders with high market share in the pipe and fitting business. Then it also has competition from Finolex Industries. So there is a strong competition for Prince Pipe. I have already created a comparative video on top stocks in piping sector in India where it was clear that Prince Pipe is the fastest growing company in the segment. If you haven't watched the video, please have a look. Now if you look at the key risk, company sale is highly dependent upon economic scenario and fall in economic activity would impact company's performance. Then there is also some dependency on government initiatives. Next risk is due to rise in raw material pricing. Raw material for UPVC, CPVC etc. depend upon crude oil movement. Increase in price of raw material could impact company's profitability. And of course, competitive risk is always there. Hence, on competitive strength, I would rate it 8 on 10. If you look at the size of plastic pipe and fitting market in India, it has been growing at 10 to 12% CAGR and stood at around 290 to 300 billion rupee. That is around 29,000 to 30,000 crore rupees. And it is expected to grow at 12 to 14% CAGR to reach 500 to 550 billion rupee. That is around 50,000 to 55,000 crore rupees. Now let's look at the growth drivers in piping sector. First growth driver is replacement of metal pipes with plastic pipes. Friends, earlier the piping infrastructure of our country was created with metal pipes. But the problem with metal pipe is that it is inconvenient to install the plumbing system as they are very heavy and they are very costly. On top of that, there was a major issue of corrosion and leakage. But now there is increased adoption of plastic pipes due to lower price, higher longevity, relatively resistance to leakage and easy installation. Second growth driver is market consolidation. There is a consolidation in the market where the market share is shifting from unorganized player to organized players. This is mainly due to imposition of high anti-dumping duty on imported CPVC resin from China and Korea, then weak balance sheet, the NBFC financial stress, sluggish demand and GST implementation and strong focus on stringent quality norms. Hence, it would create opportunities for companies like Prince Pipe to gain more market share. Third growth driver is high demand from irrigation sector. Irrigation is the biggest end user segment for plastic pipe, accounting for around 40 to 45% share in the industry. Roughly 50% of arable land is still not irrigated and 60% of irrigated land in India is dependent upon tube well, which are at the mercy of monsoon. This provides a multi-year opportunity for agri pipes in India. Thus, the government of India has increased its focus on improving irrigation coverage area, which is expected to drive demand for PVC plastic pipes over the medium to long term. Government has also launched a flagship program called Pradhan Mantri Krishi Sinchai Yojana, and then initiatives like Per Drop More Crop that focuses on micro irrigation system like your sprinkler, drip, pivots, rain guns, etc. to promote precision farming by making water easily available. This would again require a setup of piping infrastructure. Fourth growth driver is implementation of water supply and sanitization projects. Water supply and sanitization and plumbing are the second largest end user segment for plastic pipes, accounting for around 35 to 40% share in the plastic pipes market. Water is an essential resource and Government of India has taken initiative to conserve and reuse it. The plastic pipe industry has witnessed a good demand in the past 5 years from central government, high spending on urban development projects such as Atal Mission for Rejuvenation and Urban Transformation, that is AMRUT. Then initiatives like smart cities projects, etc. AMRUT aims at establishing an infrastructure that could ensure adequate water supply and robust sewage network in 500 towns in India. And the fifth growth driver is demand from real estate sector. There are multiple factors that would create demand for piping infrastructure in real estate sector, including urbanization, where people are moving from rural villages to cities that require construction of houses and building. Then affordable housing projects from government like Pradhan Mantri Awas Yojana, etc. Overall, if we see, there is a major problem of drinking water in the country, a major issue of access to piped water in households, especially in rural area, problem of contaminated water, problem of proper sanitization, etc. All these issues result in increased government spending towards building a proper infrastructure in the country. In the recent budget of 2021, government has allocated 1.14 lakh crore in Swachh Bharat mission for next 5 years. Jal Jeevan to provide water supply to 2.6 crore household in India. Ministry of Housing and Urban Affairs has been allocated rupees 54,581 crore. Agriculture credit has been increased to rupees 16.5 lakh crore. This would result in increased demand for piping and fitting sector, and that's where Prince Pipe has a bright future growth prospect. In order to cater to the growing demand, in 2019, Prince Pipe started a new manufacturing facility in Jaipur. With that, Prince Pipe had 6 manufacturing facilities in northern and western part of the country. And due to that, it had stronghold in northern region. However, the company wanted to expand its business and hence it started its 7th manufacturing plant in Telangana with a capacity of 50,000 tons per annum. With this, Prince Pipe would also expand in the southern part of the country. Prince Pipe is consistently building its brand identity with various campaigns across platforms. In 2018, it has appointed Akshay Kumar as its brand ambassador. Company is planning to grow both organically by setting up new manufacturing facilities and inorganically by acquiring established products. For example, in 2012, it acquired a brand named Trubor, which is a very popular piping brand in Tamil Nadu. Company is planning to expand its presence by penetrating more into the region it already has a presence, as well as expanding to newer region by adding more retailers and distributor partners. Overall, on future growth prospect, I would rate it 10 on 10. If you look at the revenue for Prince Pipe, it has grown from rupees 957 crore in March 15 to levels of rupees 2072 crore by March 21. That's a decent CAGR growth of 13.7%. Its profits have grown from rupees 16 crore in March 15 to rupees 222 crore by March 21 at an exceptional growth rate of 55%. In fact, the profit has almost doubled in the last 1 year. Now, how many companies do you know whose profits have grown at a rate of 55% in the last 6 years? Very few. Hence, on growth ratio, I would rate it 10 on 10. If you look at the operating profit margin, it has consistently increased. The current operating profit stood at 17%, which is decent. If you look at the return on equity and return on capital employed, it has been fluctuating over the years. However, the recent ROE and ROC for FY21 stood at 21.3% and 28.3%, which is great. Hence, on profitability ratio, I would rate it 10 on 10. If you look at the debt to equity ratio, it has been consistently falling. The latest debt to equity is 0.08, which is negligible. Over the years, Prince Pipe has paid off its debt and today company is almost debt free. Hence, on debt to equity ratio, I would rate it 10 on 10. If you look at the reserves of the company, it is consistently increasing from Rs 106 crore in FY15 to currently at Rs 933 crore by FY21. If you look at the shareholding pattern, promoters have a high shareholding in the company with 63.25% share. FII have increased the shareholding in the company from 0.65% to 2.43%. DII have increased the shareholding from 14.75% to 15.65%. High holding from promoters shows the trust in the company, and both FII and DII have increased their stake in the company, which is again a great sign. Prince Pipe had its IPO in December 2019 at a price band of Rs 178, although it was opened at price band of Rs 160. But since then, the share has jumped to the level of Rs 625 within 1.5 years. That's a crazy jump, isn't it? But in spite of that crazy rise in share price, the share is currently trading at a price to earning ratio of 31, which is very reasonable for a growth stock like Prince Pipe. Hence, Prince Pipe is looking attractive at current valuation. Overall, if we conclude, Prince Pipe is in the business of pipe and fitting with a market presence of 30 plus years and very experienced leadership and diverse product portfolio. Company has a strong brand name and financials look solid. This makes Prince Pipe a fundamentally super strong company. On top of that, there is immense growth potential in the piping sector and Prince Pipe would continue to grow in the future, although it has strong competition. At current P valuation of 31, the stock is looking very attractive and that makes it worth investing for long-term wealth creation. It is one stock investors should consider in their portfolio for long-term investment. So what is your view about this stock? Have you invested? Do you think it is a multi-bagger? Let me know in the comments. And to learn more about stock picking, course details are in the description box. I will see you with another video. Till then, take care.